Did you know that India's union budgets have introduced significant policy shifts directly impacting NRIs in the last 5 years? With budget 2025 just around the corner, the stakes couldn't be any higher. Will it bring tax reliefs, investment opportunities, or stricter compliance rules? This video is a must watch if you are an NRI or have any of your loved ones abroad. Stay until the end to know what budget 2025 could mean for you and how you can prepare for the changes. Hello and welcome to NRI Money with Alok, your trusted channel for smart financial strategies, investment advice, and life planning for NRIs. In today's video, we'll talk about budget 2025 expectations for NRIs. Every year, the Indian government unveils policies that impact millions of NRIs worldwide. With the Indian economy booming and the global position playing a significant role in its growth, the budget could hold several surprises. By the end of this video, you will have clarity on 10 things that you may expect from budget 2025 as an NRI. Now, the first point is reinstating a 182-day limit. The 2020 Finance Act introduced stricter residency norms categorizing individuals based on their duration of their stay in India and also their Indian income. Now, currently, those staying less than 120 days are non-residents. Those staying from 120 to 182 days with Indian income below 15 lakhs are also classified as non-residents. Individuals staying from 120 to 182 days with an income above 15 lakhs are qualified as not ordinary residents, making their India-sourced income taxable at the resident rates. Now, earlier, you simply needed to ensure that your stay in India is below 182 days. Now, you must monitor your India-sourced income and stay over the preceding 4 years also. Now, with NRIs facing challenges in determining residency status, there is a growing demand for reinstating the 182-day limit to reduce ambiguity and ensure compliance. The proposed Direct Tax Code (DTC) is expected to streamline these rules and encourage adherence. Point 2. Simplifying of TDS on real estate transactions. So, for NRI selling property in India, compliance with Section 194IA of the Income Tax Act is cumbersome. While property buyers deduct 1% TDS for transactions exceeding Rs 50 lakhs, when the seller is an NRI, the higher tax rates apply, requiring things like TAN, submission of e-TDS returns, management of complex TDS processes, lower TDS certificate, and etc. NRIs are urging for simplified property transaction processes in the upcoming budget to eliminate the administrative hurdles and improve the ease of these property transactions. To know what are these TDS rates on real estate transactions, watch this video. Point 3 is treaty benefits. In order to avail dual taxation treaty benefits, NRIs are required to electronically submit Form 10F and provide a TRC, which is Tax Residency Certificate, from their home country. I have created one more video on TRC, you should check it out here. It is important to note that foreign tax authorities typically cannot confirm residency statuses for the future periods. To address this issue, government should allow NRIs to initially submit the TRC of past 1 to 2 years, and then if required, they can submit the TRC going ahead. This adjustment has the potential to minimize delays and enhance accessibility for NRIs seeking the dual treaty benefits. Fourth is addressing refunds and filing pay challenges. The tax filing process for NRIs often involves hurdles such as Aadhaar linkage requirements, inability to e-verify tax returns due to lack of Indian bank accounts, phone numbers, or access to foreign IP addresses. Delays in crediting refund to overseas bank accounts and restriction on tax payment through Indian accounts posed several challenges for NRIs. Enabling smooth financial transactions through overseas accounts could resolve the cash flow issues. Fifth is exempting NRIs from ITR filing if the income is less. Now, as per Section 139 of the Income Tax Act, every person other than a company or a firm is required to file an income tax return (ITR) if his total income during the previous financial year is above the basic exemption limit. This basic exemption limit under the new tax regime is 3 lakhs and under the old tax regime is 2.5 lakhs. However, ITR filing is mandatory for individuals even when their income is below the exemption limit. If the individual has deposited over 1 crore in his current accounts, if the individual has spent more than 2 lakhs on their foreign travels by themselves or for any person in their family, if the individual has spent over 1 lakh on electricity bills, the above conditions apply to NRIs as well. The government should exempt NRIs from mandatory ITR filing if they have spent over 2 lakh on foreign travels, but they have total income in India below the basic exemption limits. In my experience of serving NRIs for more than a decade, I have noticed that few things where government should relax norms for NRIs. Here are a few suggestions from my side also. Expanding the ESOP tax benefits. Now, India's tax laws currently allow employees for eligible startups to defer their ESOPs. Extending this benefit to all employees, including NRIs, regardless of the employer status, could enhance the compensation structures and also ease the cash flow management for NRIs. We know most of the NRIs work with startups and tech companies. Also about the rebate process. The rebate under Section 87A is available to individual taxpayers whose income doesn't exceed the specified threshold. The limit is 7 lakh under the new tax regime and 5 lakh under the old tax regime. Now, if your income falls within the thresholds, your tax liability actually is reduced to zero. In simple terms, if your taxable income is less than the mentioned limits, you don't need to pay taxes because the rebate cancels out your tax liability. I would really love if this is extended to NRIs. Also, extending Simplified ITR 1 forms to NRIs. The Simplified ITR 1 tax return form is available exclusively to resident individuals with income limited to salary, one house property, agricultural income up to 5,000 and other sources. Given that many NRIs only have limited income sources in India, covering NRIs in form ITR 1 will simplify all the compliance processes. Also, a big point is notices. Now, as per the Central Action Plan data, about 5.5 lakh appeals were pending for disposals as of 31st March 2024 with CIT, which is the Commissioner of Income Tax, the first level where you can challenge tax demands. Now, that's a 64% increase from financial year of 2019. I have come across hundreds of such cases where NRIs are involved in such appeals. The main reasons are limited staff, technological limitations, and things like that. Despite the introduction of faceless assessment schemes aimed at expediting the process, the backlog and procedural inefficiencies have resulted in significant delays. This delay can be attributed to high volume cases and the limited capacity at the appellate authorities. I hope the government should improve the infra and streamline the judiciary process. One last point is about tax-free income slab. Now, resident individuals have a tax-free income tax slab of 5 lakh in old regime and 7 lakh in new regime. But for NRIs, it is only 2.5 lakh in old and 3 lakh in new. I hope this is increased for NRIs and brought back to resident individual levels, as NRIs also contribute equally to our GDP and growth of the country. We have already seen the kind of remittances NRIs have made in the previous year back to their home country here in India. So to conclude, Budget 2025 is about to come on 1st February and it holds immense possibilities for NRIs. Whether it's easing the tax compliance burdens or creating new opportunities, reducing complexities, and moreover, reducing the main burden of residential property taxation, wherein earlier you had an advantage of indexation benefit, but now you don't have, which is a very sad thing for NRIs. Residents have the option to either select the new taxation or take advantage of the indexation benefit and pay lesser taxes. So I hope this also gets covered for NRIs. This is Alok signing off from NRI Money with Alok. And if you need any help for NRI investments taxations, feel free to reach out to us. Thank you.